Hello investors and traders, today I'll speak about 3 dividend stocks to buy right now. Look, I have here in my custom watch list, my custom screener for dividends. Now I'm interested about 20 US stocks for now. Look, the topic of our video today is 3 dividend discounted stocks, so let's search for them. So here in strategy, of course, I put a filter. I here put a dividend. Then the next one, look, I don't like companies current level with current ratio very low. I remind you that current level, it's all the current assets divided by current liabilities. So if it's less than 1, so it's a problem. Such companies not interested for me. Also, I would like to see a debt to EBITDA ratio. The leverage of the company is not too high, so that's why, of course, such figures 6, 7 for me is too much. I don't want to see the financial leverage. I don't want to buy a highly financial leveraged companies in my portfolio. So then, look, I would like to buy maybe some companies with poor performance this year. I'm combining now. I'm in process of combining portfolio for the next year. That's why, of course, I would like to see companies performing not so strong this year, to hold them for the next year. Also, company that showing losses now, not interested for me. That's why I put it out. Also, look, the payout ratio. I remind you, payout ratio for dividends, it's meaning that the amount, the level of net income the company pays as a dividend. So usually, if we see for here CMC, it's I think it's very strange company, Israeli one, that paying even more than its net income as a dividend. So it's very negative sign. So such companies also not interested for me. When I see 80%, 90%, 100%, so for me it's too much. So here is the list for my top 3 companies for today, and let's start with the first one. So today I guess it's Pfizer. So if we'll check its chart, look, now it's 33 bucks. Here I see 2 major support levels, 33 and 30. And let's have a look on its fundamental parameters. So we see it market cap 200 billion bucks, so it's a huge company. The dividend yield more than 4%. Now the P ratio is very cheap, it's less than 10. The average for S&P 515, and the PS, price per revenue, also very cheap, is about 3. So very expensive stock for now. Here we see that the revenue of this company is continued to grow, and also the marginality last year is improving. By the way, for the last year is 31%, so very impressive marginality. By the way, most of its revenue, the company 41 earned in the US, and developed Europe is about 20%. Also, we can see that the payout ratio is 42, so it's for me it's quite convenient. And at least last 5 years the company increased in dividend payments. By the way, here the years of dividend increasement is 1, so it's quite enough. But also look here, the 3-year dividend growth is more than 3%, so quite convenient. By the way, look, here I have also a formula. So the PS 2.6 now, but for me, counting the marginality and other parameters, fair PS in my mind about around 7. So now I think it's Pfizer is very discounted. By the way, minus 30% in this year. Of course, after the pandemic, after the COVID, after all the restrictions, so they vaccine, of course, they made a lot of money. And now just they it's not so easy to continue to show nice such figures, but anyway, the EPS earning per share for the last 5 years, the average is more than 20%. For me, it's quite impressive. So the Pfizer is the first stock for today. Let's move to the next one. It's Target. Target, we see dividend yield more than 3%, the payout ratio 65, and 3-year dividend growth is 15%, and very impressive dividend history, paying increase in years of increasing it more than 50%. So of course it's very nice figures. By the way, it's very cheap stock. The PS only is less than 1 and PE is about 16, but don't forget that you may receive here a nice dividend history in Target company. Let's have a look on its chart. So Target, let's check it. So it's down more than 70% from the beginning of the year, but here by the way, from its high levels, it's down more than 50%. So you can buy with a nice this company with a nice discount. Here the major support level in my mind is about 106 bucks. So here I think in this range it can be a nice point to buy this company. By the way, the momentum indicator there is size on the weekly time frame 31, so the stock already oversold. So it's can be nice time to consider this company for buying. Let's have a look at the fundamental parameters. Market cap is 57 billion bucks. The PE is 16, but is 16. Yeah, but historically it was 15, 26. No, let me check the PE ratio here. So now it's 60, 17. But the average, I guess, about 20, 22. So I think now the valuation is even cheaper than the average for last years. But look, the PS ratio, the revenue is for this company is very, very cheap. It means that for 53 cents you can buy $1 of Target revenue. So of course we see historically it's very, very, very low and very cheap. So it's another reason why I'm interested in buying this company's shares. And of course dividend history of increasing dividends for more than 50 years. It's for me it's very nice. By the way, let's have a look on its financial position. Debt to EBITDA ratio is all of this company less than 3. Interest coverage very strong, more than 8. So any problems with debt for this company? And of course the EPS earning per share for this company continue to go. So for me, Target is another nice company to buy, to consider, to watch, to at least to add this company to my watch list. And the last stock for today is Gilead, a nice, great dividend paying company. Dividend yield about 4%, payout 67, and 8% years of dividend increasing. By the way, here we see the fair PS ratio in my mind 5, and now the actual PS ratio only 3.5. So this very discounted stock in my mind. The performance it's down more than 10%, and also any problems for sure in its financial position, in financial stability. It's in my mind, of course, it's my personal opinion. If we'll check it chart of Gilead, so actually since 2017 it's traded in the range between 88 and 60 bucks. Dividend yield 4%, and let's have a look on its fundamental market cap about 100 billion bucks. This company is a healthcare company, biopharmaceutical. It engages in the research, development, and commercialization of medicines in area of unmet medical need. The valuation is, as I told you previously, in my mind now is okay. It's cheaper than the other market. The revenue of this company very stable, and the marginality also very stable, about 24%, 22%. And also we can see the company continue to decrease its amount of debt. For example, 3 years ago it was the debt outstanding in balance sheet more than 32 billion bucks. Now it's about 25 billion bucks. So the Fed fund rate is more than 5% now. So of course we continue to be in an environment in a highly interest rates environment, and of course it's better for the company to decrease its leverage, financial leverage. So Gilead, the Target, and Pfizer are the three stocks for today. And now look, this year I'm already done 28%. Now I'm in process in searching research stocks for the next year, and it will be portfolio 2024. Of course it will be dividend companies, most of them, and of course I will share my portfolio, my thoughts for the next year in the future weeks. I guess now I'm just looking how it better to perform, to show you the performance, my portfolio construction, my analysis. Of course I will share it with you. So of course thank you for watching. If you like dividends, if you're interested in the stock market, please subscribe to my channel, and see you on the next time. Bye.